as it pertains to Berkshire Hathaway. I actually think there was some meaningful news, and Mike touched on it. About, I think it was mid-July, they came out and relaxed their buyback criteria. And the stock had been lagging the market, not dramatically, but by a fairly modest amount for several months. And I actually think that was a meaningful moment for the stock. It's traded much better since then. Yeah. And he did say this morning that they have been buying some stock. And it was also in regard to Apple. I thought it was very interesting, also indicative of his mindset. He'd almost rather see it trade down 10%, knowing that they could buy back stock. And that's actually a little bit more of an endorsement of buybacks broadly than we've probably heard from Warren over time.
Yeah, and those Berkshire B shares are outperforming the broader markets this quarter. I think they're up about 12% on all this buyback news. Jeff, I want to get your thoughts as well. You're someone who used to be invested in this company, but has since sold your stake. You're what we could call, I guess, a Berkshire bear. What was your takeaway from this interview with Warren Buffett?
I would never be labeled a Berkshire bear. I just think the model has issues.
Okay.
And the main issue being, as Buffett himself said in his letter, which no one seemed to focus on back when it came out, that in order to grow earnings substantially, Berkshire has to make one or more huge acquisitions. And that's a symptom of a company that's not compounding its own businesses the way companies like Microsoft, Apple, Amazon are. So that's where my concern comes in.
And so the fact that this is a company that's sitting on almost $120 billion in cash right now, treasuries and the like, and not putting that money to use, I mean, what do you see as the read-through on that?
What do I see as the what on that?
How do you interpret that right now?
Well, stocks are at all-time highs, right? I mean, the valuations are not cheap. He, in my view, way overpaid for precision cast parts, and that was 3 years ago. Anything out there, the elephants that he's looking for are very expensive, and I don't think it makes much sense to go elephant hunting right now. When he bought the railroad back in 2010, total genius, absolute total genius. But there aren't too many elephants like that at attractive prices. So I don't know what he does with the cash, but I would return it to shareholders and let them invest in other things that are actually compounding.
I want to be careful about attributing causality to Buffett's comments on a thin market day even. Apple is up, as Bob said, but session lows here in the minutes following his comments. Do you think that has anything to do with this?
I think Warren would reach back through the screen from Smith & Wollensky's if we started talking about tick-by-tick movements.
Sure, absolutely.
In the stock. I don't think there's much correlation there, really, and if there is, I think it'll pass very quickly. But I think some of the comments that Jeff made were quite pertinent. And look, the elephant in the room is that $120 billion in cash. What are they going to do with that? Why have they been reluctant to go elephant hunting, to make a big acquisition since Precision Cast Parts, which is about 3 years ago now? And to come back to one of Mike's key takeaways from the conversation, he did seem he kind of curbed his enthusiasm at all points. And look, I would never expect him, none of us would. He's not going to come on CNBC and say, look, this bull market's over, it's toast, get out. That's not going to happen. And on the flip side, he's not going to say, my God, stocks are screaming by in the short term, we're going up 100%. He's not going to do that. But I do think that reluctance to use that $120 billion in cash is indicative of the fact that he knows the equity market is expensive. His favorite metric over time has been market cap to GDP. We're right back up around all-time highs, around 2000 levels, and I think he's very cognizant of that, and I think he'd like to see a pullback before being more active.
He did discuss trade and tariffs, the degree to which they're seeing price pressures on things like building materials. Listen to that.
We are seeing some effects from that, and we're seeing some effects from inflation. From inflation. We've seen more in the way of cost increases in the last year, if you go across all of our businesses, but particularly building materials or we sell paint. I mean, the can it comes in, that is a lot more expensive than it was a year ago.
And like most people, Mike, hard to separate what is just from the economic cycle and what's from tariffs in particular.
Exactly. I mean, I guess the real takeaway is the tariffs did not come into place at a time when you were worried about deflation, when you essentially, it was kind of pushing in the same direction as we've had with inflation. So I'm not surprised he found that to be the case. And again, he really captures a lot of the economy with this company. As long as we're pointing out, elephants in the room. Another one is, under no other circumstance would this company exist in anything like its current form, or would the market permit somebody to have $120 billion in cash if it were not Warren Buffett building it over the course of 60 years and putting up this brilliant record.
Yeah.
So, at some point the question becomes, what long term does the company look like? Things are going to have to be sold. And here's what's fascinating about it. It's become, I guess, the standard thing to say, don't think of Berkshire Hathaway as a stock portfolio. And that's absolutely true. But the value of his Apple stake is 10% of the market cap right now. It's amazing. Something he started doing 2 years ago, or whatever it was, is now 10% of this massive company. It's been built for 6 decades.
Just on the trade, I just want to remind everyone, at the annual meeting, he downplayed the whole trade tension thing, thought China and the U.S. would work things out, and also downplayed the whole issue about the trade deficit. He had this wonderful line, when you think about it, it's really not the worst thing in the world for someone to send you things you want and hand them a piece of paper. So it's very instructive to listen to Warren Buffett's folksy commentary on what trade deficits really mean in the global economy, essentially. And he sort of went at that obliquely today, didn't directly use that quote, but it's important to listen to him on that whole point. I love this comment on Twitter, by the way. I think all of us would benefit from maybe being a little less obsessed with Twitter and what we had to say, and stop thinking we're also important on our comments. That was a beautiful thing, a beautiful comment from him.
Yeah, not everybody says, well, I have nothing to say. I put out an annual report. That's why he doesn't tweet.
Right.